Welcome to the Deep Dive, where we cut through the corporate speak.
Yeah, get straight to what matters.
Exactly. Today, we're digging into Publicis Groupe. They just released their half-year 2025 results.
Right, the big global communications player.
And our mission, as always, is to pull out the key takeaways for you. Not just the numbers, but, what they actually mean for the market, for the ad world.
Absolutely. And spoiler alert, Publicis had another really strong quarter. Strong enough that they've actually upped their forecast for the whole year.
Okay, interesting. So confidence is high.
Definitely. We're going to unpack, what's driving that growth, their margins, and some of their big strategic plays in this kind of shifting industry landscape.
Sounds good. So you'll get a clear picture of their health, their strategy, and what it all implies.
Precisely. For advertising, digital transformation, the whole lot.
Okay, let's jump right in then. The headline numbers. Strong first half for 2025, you said.
Very strong. Organic growth came in at 5.4% for H1. And what's really interesting is it actually picked up speed in the second quarter, hitting 5.9%.
Wow, acceleration. That's notable given the general uncertainty out there.
It really is. And then there's the operating margin, 17.4%.
Which is high for the industry, right?
Industry leading, yeah. And get this, management pointed out that widens the gap over their competitors to almost 600 basis points based on consensus estimates.
6%? That's quite a buffer. How are they managing that?
Well, that's the fascinating part. They achieved this while also investing heavily. They're building out their core AI platform, hiring people for it, upgrading talent generally, spending on winning new business, onboarding those clients. It points to, really tight cost control and efficiency. They're expanding margins while still investing for growth.
It's a tricky balancing act.
It is, but they seem to be nailing it.
And that shows up on the bottom line too, I assume.
Yeah, headline earnings per share, 3.51 for the first half. That's up 3.8% from H1 last year. Free cash flow was also solid, $828 million. Actually, ahead of last year's record first half.
So financially sound. And they've been buying companies too, bolt-on acquisitions.
Yep, quite active. Spent about $600 million in H1 on these sort of targeted acquisitions.
Right.
Puts them on track for their full year plan of spending maybe $800 to $900 million. So discipline, even with the spending.
Building the plane while flying it, like you said, but keeping it steady.
That's a good way to put it. And looking at the different parts of the business. Connected media, that's about 60% of their revenue.
The biggest chunk.
Right. Still very strong, high single-digit growth again. That's really down to Publicis Media's scale and using Epsilon's data effectively.
Okay, and creativity.
Intelligent creativity, yeah, that's about 25%. Also high single-digit growth, helped by those big new client wins we mentioned.
Right, the new business momentum. Now, here's something I found really interesting. The tech side, Publicis Sapient.
Yes, 15% of revenue.
It actually got back into positive growth territory, which is a big deal, isn't it? Because IT consulting generally has been facing headwinds, clients holding back on that big CapEx spending.
Exactly. That wait-and-see approach has hit everyone in that space. So Sapient doing better than expected. That actually explains a lot of the group's overall acceleration from Q1 to Q2.
So Sapient was key to that Q2 jump.
Seems like it played a major role, yeah. And geographically, U.S. is their biggest market, 58% of revenue, solid 5.3% organic growth in Q2. And again, helped by Sapient turning positive there. Europe was 4.6%, Asia Pacific 5.7%. China specifically picked up to 5.2% growth in Q2.
It's a pretty broad-based strength, really.
It is. And all of this feeds into why they upgraded their guidance for the full year.
Right. You mentioned that. What's the new number?
They now expect organic growth to be close to 5% for 2025. That's up from the 4 to 5% range they gave initially.
Okay, a noticeable bump.
And their confidence comes from, an absolutely huge wave of new business wins. They said 15 significant wins just since the start of the year.
15. Wow.
Yeah. And some of those are only just starting to ramp up from Q3 onwards. Now, they were careful to say they do expect some clients might pull back on marketing spend a bit in the second half.
Sure, that's always a risk.
And they acknowledge Sapient might still end up slightly negative for the full year overall, despite the Q2 improvement.
Okay.
But the point is, they're stronger than expected first half, plus all these guaranteed new business revenues coming online. It more than covers those potential slowdowns.
Got it. So the H1 performance and the new wins basically de-risk the second half outlook.
That seems to be management's view, yes. It gives them that confidence to raise the guidance.
So if we zoom out a bit, what does this all say about their strategy, their position in the market? Management seemed quite bullish.
They did. They talked a lot about how the industry is disrupted, lots of competitors restructuring, changing leaders.
Seeing some of that.
While Publicis feels their big transformation is, quote, behind them, they've spent the last 5 years building this integrated model.
So they feel they're ahead of the curve.
Very much so. And they argue clients need partners now more than ever, especially with AI shaking everything up. So they're focused on just 3 things now.
Okay, what are they?
First, just keep gaining market share. Simple as that. And the numbers are pretty wild. Net billings, that's the measure of new business wins, hit $5.2 billion in the first half.
Billion with a B.
Yep. And it accelerated in Q2. That's up 68% compared to H1 last year.
68% when the rest of the industry is.
Largely flat or even down. Exactly. It's not just winning new clients, it's also keeping the ones they have and selling them more. They grew revenue with existing clients by nearly 3%.
Okay, so it's about being sticky too.
Right. Bringing them new stuff, new services powered by AI. This leads them to call themselves a category of one.
Category of one, that's quite a statement. What does that actually mean, or practically speaking? Does it give them like pricing power, protection from churn?
That's a great question. I think it implies they believe they've built something unique, integrating data, creative, media, tech, all with AI that competitors can't easily copy. Not the traditional agencies, not even the big tech platforms.
So a competitive moat.
Exactly. If clients see you as essential for their entire transformation, not just buying ads, you become more a partner than a vendor. That should mean better retention, potentially more pricing leverage down the line, and just a more resilient business overall.
Makes sense. Okay, so market share first. What's number 2?
Doubling down on AI, mostly through more of those bolt-on acquisitions we talked about. Since they launched Core AI early last year, think of that as their AI brain, connecting everything they've invested almost $2 billion.
Wow.
And they say it's paying off. AI-related services drove over 15% of growth last year, on track for over 20% this year.
So AI isn't just hype for them, it's actually driving revenue.
Seems so. They pointed to acquisitions like Influential, that's an influencer marketing platform achieving triple-digit growth. And Mars United Commerce, growing double digits, helped win some major retail clients.
So they'll keep buying these specialized companies. Data, new media, production.
That's the plan, building out those capabilities.
Okay. And the third priority?
Talent. They were really clear. In a service business, people are everything. Number one reason for success, they said.
Right.
And they see an opportunity. While competitors are cutting costs, maybe laying people off, Publicis is growing. They think that makes them attractive. They can hire top people who might be unsettled elsewhere. And they need them, obviously, to handle all that new business.
So attracting and keeping the best people is key to executing on the first 2 priorities.
Precisely. It all links together.
It sounds like a very integrated, confident strategy. They even sort of dismissed the threat from tech platforms like Meta, suggesting AI won't make agencies disappear. Is that realistic? Could they be underestimating that?
It's the million-dollar question, isn't it? Their argument is that clients don't want a single tech platform controlling everything. They need someone independent.
An orchestrator.
Yeah, exactly. Someone to connect all the different pieces, various media channels, the client's own data, ensuring brand safety, measuring results fairly. A platform like Meta or Google, they argue, has its own interests, its own walled garden.
Right. They want you locked into their ecosystem.
Whereas Publicis pitches itself as the unbiased partner who can navigate the whole complex landscape for the client, protecting their data, their brand value.
So in an AI world, that integrator role becomes even more valuable, not less. That's their bet.
That's the bet. They believe complexity and the need for trust actually strengthen their position.
Interesting take. Okay, so connecting this back, they have this balanced revenue mix. Media is strong. Sapient is improving.
Right. 60% media, 15% Sapient for that transformation piece.
And even though they expect maybe some client caution in H2, the first half strength and those massive new business wins seem to cover it.
Fully accounted for, according to them. They feel well positioned because clients need help with data ownership, connecting different media, protecting their brand, especially now with AI changing the game. They see good momentum carrying into 2026.
And one other point they made, they're not focused on principal media, right?
Right.
Buying and reselling inventory themselves.
No, not really. Unlike some others. In the US, it's only like 1% of their revenue. Their focus is on using data and AI within new media areas, advanced TV, retail media, creator platforms, to innovate and save clients money, not just be a massive media buyer in the traditional sense.
So focusing on value add through tech, not just scale.
Exactly. They think that different approach is a big part of why they're outperforming competitors by such a wide margin, that 800 basis points you mentioned earlier.
Right, okay. It's a pretty compelling story they're telling.
It is. Consistent execution over several years now.
All right, well, as we start to wrap up this deep dive, it's time for our favorite segment. This is not financial advice.
Yes, the moment for outrageous but plausible speculation.
Precisely. So, sticking with this theme of disruption and companies navigating tricky environments, here's a thought experiment.
Okay, lay it on us.
How about a paired trade? You identify an industry facing major shifts, let's say, like the broader digital economy or even something like healthcare, which we've seen turbulence in.
Okay.
And you short a company that seems to be struggling, maybe stuck with old ways, a messy structure, while going long on a company in the same space that's showing real signs of aggressive adaptation.
Like Publicis, leveraging AI, consolidating smartly.
Exactly. It's not just a bet on the sector, but a bet on management, on their ability to really navigate the storm, use tech smartly, make bold moves, and come out stronger.
Yeah, I like that. It's about backing the adapters, the innovators, the ones showing proactive leadership, while betting against those who seem slow or unable to change course. It's about recognizing divergence within a sector.
Right. The smart versus the stagnant, perhaps. It's a play on aggressive, intelligent execution in a tough market.
The conviction trade in leadership, essentially.
Nicely put. Okay, so to recap Publicis Groupe, a really strong first half, organic growth accelerating, industry-leading margins expanding.
Driven by those huge new business wins, net billings up 68%, and their focus on AI integration through core AI and acquisitions like Influential and Mars United Commerce.
They've significantly upgraded their full-year guidance to close to 5% organic growth, feeling confident despite potential H2 headwinds because of that H1 performance and locked-in new business.
And strategically, they see themselves as a category of one, thriving in a disrupted industry by partnering with clients on transformation, leveraging AI, and attracting top talent while dismissing existential threats from tech platforms.
They emphasize their balanced mix, the strength in media, the sapient recovery, and positioning themselves as the essential partner for navigating data, media complexity, and brand value in an AI world, seeing tailwinds into 2026.
A picture of confidence and solid execution.
Indeed. Now, as always, please remember, everything we've discussed today is purely for informational purposes. It is absolutely not financial advice.
Definitely not. Always do your own homework. Talk to a professional advisor before making any investment decisions.
Think about how these themes, disruption, adaptation, the role of AI, strategic execution, resonate with what you're seeing out there. We'd love to hear your thoughts or any questions you might have.
Yeah, absolutely.
Thank you for joining us for this deep dive.